Hello folks, this is Brad Allen from Drake & Associates with an educational economic update for June 2018. In this month's video, I'm going to discuss some of the major headlines that influenced the market in the last month. I'll also provide some insight on what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. So geopolitical headlines continue to affect the markets in May as investors tracked a number of scenarios. For example, the back and forth over the scheduling of the historic US-North Korea summit really affected the performance as investors tried to determine whether that meeting was going to happen or not. Investors also watched as trade tensions between the US and China amplified, with each country threatening tariffs on the other side. The tensions then calmed as the countries released a joint statement saying that they would work substantially to reduce the United States trade deficit in goods with China. The month ended with more trade-related tension. On May 31st, the Trump administration announced that at midnight, US tariffs were going to start on aluminum and steel from Mexico, Canada, and the European Union. In reaction, the Dow dropped more than 250 points that day. Despite the backdrop of the political fluctuations, all three major U.S. indexes ended the month in the positive territory. The S&P 500 gained 2.2%, the Dow added 1.1%, and the Nasdaq leapt forward 5.3%. So as the month came to a close, we received a number of reports that indicate the economy continues to grow. In particular, the latest data shows that consumer spending jumped more in April than analysts had expected. Inflation also hit the Federal Reserve's target level for the second month in a row. In examining these two things together, the details economists increased their forecast for the economy's growth in the second quarter. Speaking of economic growth, we received revised data for the first quarter GDP, which has increased slightly less than originally estimated. The change came largely from decreased business inventories, but rather than that being negative, this data creates a greater opportunity for increased production in future quarters. In fact, some estimates indicate that the second quarter GDP could be 4% or higher. In other words, if you look beyond the headlines, you're going to find data indicating that the economy continues to strengthen. Global events are affecting the markets, but our economy keeps expanding during those tensions. So during June and beyond, we're going to continue to analyze the data and see what might lie ahead for you as an investor. So that's it for this month's Educational Economic Update. Visit wealthwisconsin.com to learn more about our upcoming workshops, and be sure to listen to our Retirement Ready show on AM 620 WTMJ Saturdays at 1 o'clock. Once again, this is Brad Allen from Drake & Associates signing off for the month of June 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call anytime. We'd be happy to talk to you about it.